Very good afternoon to all of you. Today we are going to discuss some of the basic problems under the head income from other sources. Okay, so in the last class we have discussed regarding some of the incomes which are chargeable to tax under the head of income from other sources and their classifications, like for example securities, and their treatment in the Income Tax Act. So in this class, let us have a look on some of the basic problems. Okay, so here comes the first basic problem, which I have choose this problem from the textbook for the purpose of the simple understanding. Okay, I will read out once a problem. Before going to the problem, let me remind you, you should have the theory sources which I have provided in the previous class. Okay, so let us go through with this one. Mr. Anand, an ordinary resident, earned the following incomes during the financial year 2018-19. So here the incomes Mr. Anand has been earned for our previous year 2018-19, we are required to calculate what might be the taxable income. We will go with one by one. The first one, the director's fees. So as I explained in the previous class, the director's fees received who is not an employee of that organization. So in the place of the director, if Mr. Anand is a director, so if he receives any kind of the fees as a place of the director position, so it is taxable under the income from other sources, and he has received 20,000. First one. Second one, income from agricultural land in Pakistan. So remember one thing, the income from the agricultural land in India is exempt from tax, but if the income is out of India from the source of the agriculture income, it is treated as the foreign agriculture income and it is fully taxable, and that base is 15,000. Next one, the ground rent for the land in Bangalore. So he has rented the ground for the purpose of some business activities in Bangalore. So he has received a ground rent of rupees 10,000, which comes under the income chargeable under the head income from other sources. Okay, and fourth one, interest on post office savings bank account or postal savings bank account. We can pronounce at the different ways. So post office savings bank account, he has received the interest of rupees 10,000. Okay, so 10,000 rupees, out of 10,000 rupees, I have explained in the previous class, that is 3,500 in case of the individual post office savings bank account. If any kind of the interest has been fetched to that account, 3,500 is exempt from tax. If it is a joint account, then 7,000 rupees. So here he is going to get the exemption of 3,500 in treatment of the 10,000 rupees. Next one, interest on deposit with Industrial Corporation of India. So it comes under the deposits. So any kind of the deposits maintained by the assessee, any kind of the interest which is fetched by him on the deposit made by any kind of the corporations of Government of India undertaking, it is fully taxable to charge. Okay, so that comes to rupees 5,000. Next, dividend from a foreign company. As you know, dividend from Indian company is exempt to the extent of 10 lakh rupees, but here the dividend from foreign company or the dividend from cooperative societies, it is fully taxable. Okay, 7,000 rupees. Next, rent from subletting of the house. So Mr. Anand is residing in a rented house, and out of that rented house he has sublet provided to some other assessee, to some other third party, and out of that he is getting a rent of 26,250 rupees. Okay, so out of that 26,250 rupees, rent payable by Mr. Anand for the sublet house is rupees 12,000. So what's the portion of the amount which is paid by Mr. Anand on the sublet house, that is 12,000 rupees. He is going to get the rebate of this 10,000 is 12,000 rupees. Okay, and there is one more expenses, that is point number I. Other expenses incurred on this sublet house is rupees 1,000. So 1,000 rupees he has incurred some of the expenses. Both these two amounts, that is 12,000 and 1,000, he is going to get the rebate. Next one, that is winning from horse race. So it comes under the casual incomes, which is not recurring in nature. Okay, so winning from horse race, they have provided 12,300 rupees. Here they have not clarified whether it is net or gross. In case of the absence of the information, in case of the casual incomes, whether it is net or whether it is gross winnings, then we have to assume that that amount is itself is a gross winning. Okay, and there is no need to make an additional grossing up. And last one, that is interest on securities, rupees 4,000. Here there is no confirmation that whether it is tax-free government security. Therefore, we can assume that the interest on security is a taxable security income, 4,000 rupees. And they have asked to, you are required to inform Mr. Anand what will be his taxable income from other sources for the assessment year 2019-20. Okay, so here we have to advise to Mr. Anand what will be his taxable income from other sources on which he has earned this much of the incomes. Okay, so I hope that you have understood the problem. Let us go with the solution for this one. So as a normal process, we have to provide the solution of the heading computation of taxable income from other sources by providing that the name of the assessee is Mr. Anand and his residential status is ordinary resident, and we are computing the income from other sources for the assessment year 2019-20 for the income earned in the previous year 2018-19. Okay, comes the solution. So we have to draw the table of 3 columns. Okay, first we will go with one by one. The director fees, that is rupees 20,000, which I have told already taxable. Income from agricultural land in Pakistan, that is 15,000, that is foreign agricultural income. Next, ground rent for the land in Bangalore, that is rupees 10,000, and interest on post office savings bank account, that is rupees 10,000. Rupees 3,500 has been exempted. I have provided the clarification under note number 1, that is interest on post office savings bank account is exempt up to rupees 3,500 for an individual assessee and rupees 7,000 for the member of Hindu undivided family. Okay, so out of 10,000 rupees, 3,500 rupees is exempt from tax and 6,500 rupees is taxable. Next, interest on deposit with Industrial Corporation of India, that is the interest which is fetched on the deposit made by the assessee, it is fully taxable, that is rupees 5,000. Next, dividend from a foreign company. So here he has received the income of in the form of dividend from a foreign company of rupees 7,000. Okay, and next one, that is rent from subletting of the house. So Mr. Anand is receiving a rent from subletting of house is rupees 26,250, and we have to provide as per our the provision for the subletting of the house which we have discussed in the last class, that is rent payable by Mr. Anand for the sublet house, that comes to rupees 12,000, and other expenses incurred on the sublet house is rupees 1,000. Both these 12,000 plus 1,000, 13,000 is exempt from tax, and remaining 13,250 rupees is taxable rent from subletting of house. And the next one, that is point number H, winning from horse race, as there is information absence of whether it is net winning or gross winning, we are going to assume that it is a gross winning, and 12,300 rupees is directly taxable. And last one, interest on securities, that is taxable commercial securities, we can assume under that category, that is rupees 4,000, and the combination or the addition of all these incomes, it comes to rupees taxable income from other sources of rupees 93,000 2,050. Okay, so here we have to provide the interpretation. That is, from the above computation, it is clear that Mr. Anand is having rupees 93,050 of the taxable income from other sources for the assessment year 2019-20. So hope that you have understood the first basic problem. Okay, so let us go with the second problem. That is, it is a question paper problem. Whatever the question paper I have provided on that, this question has been arised for 5 marks in November-December 2013 question paper. Okay, so I will read out once. From the following information, calculate the income from other sources of Sri Krishna for the annual year 2019-20. Okay, so we have to calculate the income from other sources. Okay, there are 6 points which they have provided. It is a 5 marks question. First one, the director's fees, that is rupees 2,000. Again, it is taxable as we have discussed in the previous problem. The director's fees received who is not an employee of that organization, it is fully taxable. Next, income from agricultural land in Nepal. Again, Nepal is a foreign country. Therefore, the agricultural income received in Nepal or agricultural income earned in Nepal is taxable to the extent of 15,000 rupees. Okay, a gold chain found lying on railway platform, rupees 30,000. This category of the income, we can say that it is a casual income which is not recurring. So the gold chain can't be found continuously for Mr. Krishna. Okay, so that's why it is an casual income, we can say it. And rent from a vacant land in Mysore. So I think Mr. Krishna is having a land which he has provided on the basis of the rent to someone. So from that activity he has received 12,000 rupees of rent, and again it is fully taxable. Next one, income from undisclosed sources, rupees 25,000. So again, undisclosed sources, it might be cash credit or income from undisclosed investment or income from undisclosed business. Okay, it is fully taxable. Sorry. Winning from horse race, that is they have provided, it is a gross winning, rupees 20,000, and we can consider directly 20,000 as an taxable casual income under the head horse race. And last one, winning from chess, rupees 1,500. Again it is a casual income and we are going to consider the full amount. Okay, so let us go with the basics. That is computation of taxable income from other sources. The name of the assessee is Mr. Krishna and his residential status is ordinary resident, and we are computing the taxable income for the assessment year of 1920 and for the incomes earned in the previous year 2018-19. Okay, so we will go with the solution. So here comes the solution. That is, first one, the director's fees. So as I told earlier, the director's fees is completely chargeable to tax. That comes to rupees 2,000 as they have provided in the problem. Second one, that is point number B, income from agricultural land in Nepal. So it is a foreign agricultural income. Again it is fully taxable to the extent of rupees 15,000. Next one, a gold chain found lying on railway platform. Again it is a casual income and there is the absence of information whether it is gross or net. So we are going to consider the full amount, that is rupees 30,000. And next one, rent from a vacant land in Mysore, rupees 12,000. Income from undisclosed sources, rupees 25,000. That is the source which can't be disclosed. It might be some other suspicious or the confidential activities. From that activity he has earned some of the income and he is declaring. Okay, so he is declaring his undisclosed sources of income, that is rupees 25,000, which is fully taxable. Next, winning from horse race, and again they have provided it is a gross amount and that comes to rupees 20,000. And winning from chess, they have provided rupees 1500, so it is also fully taxable. Okay, so from this we are going to get the taxable income from other sources of rupees 1,05,500. Okay, so this amount will be taxable for the assessment year of 2019-20 of the income of Mr. Krishna. So this is the second simple problem which has been appeared on the November-December 2013 question paper. Okay, so you can refer the question paper also, or otherwise if you don't have the question paper, here I have provided the questions also with the contents. Okay, so we will go with next problem. That is, it has been asked for 10 marks in November, December, again in the same question paper 2013, and in the question paper it's having the question number of 9 in the page of 60, the question paper booklet which I have provided, that is Joyce question paper series. You can refer that one also. Okay, so I will go with the problem. Mr. Raja is a member of parliament, so he is an MP from Shivamogga. During the previous year 2018-19, he had the following incomes. So we have to compute his income from other sources. Okay, so here they have provided the contents. So point number 1, as a member of parliament, Mr. Raja received a salary of rupees 20,000 per month and the dearness allowance or daily allowance of rupees 50,000 for attending various sessions. So out of this we are going to consider only the salary as a taxable income under the head income from other sources. Why? Because the dearness allowance received for attending various sessions by the member of parliament or the member of legislative assembly or the member of legislative council, it is not taxable under any of the head of incomes. Okay, so let me remind you once again, only the salary received by the member of the parliament is taxable under the head income from other sources. This is the first one. Second one, royalty received from the publisher for writing a book on world peace, rupees 25,000. So Mr. Raja has received a royalty income by writing a book on the title entitled World Peace of rupees 25,000. Okay, so this is also a taxable income. It might be taxable to everyone, whatever the royalty income received. Okay, whatever the nature of the activity is. And point number C, that is income from article published weekly, rupees 5,000. So again Mr. Raja has wrote some of the articles which is published weekly and he has received the income from those activities, rupees 5,000. Again it is also fully taxable. And next one, dividend from cooperative society in the form of the gross, rupees 5,000. Again I have told in the previous problem, in the first problem itself and in the last class also, dividend received from an Indian company or domestic company is exempt up to rupees 10 lakh. Okay, and the dividend received from a foreign company and a cooperative society, it is fully taxable under the head income from other sources without any ceiling limit. Whatever the amount received in the form of the dividend from the cooperative society or from the foreign company, it is fully taxable. Okay, and here the 5,000 rupees, it is fully taxable. And point number E, director's fees received. Again here also appears the director's fees, and person who is not an employee of the organization, in that case if he receives the director's fees, then it is fully taxable under the head income from other sources. Okay, next one, winning from lotteries of rupees 70,000 and it is a net winning. And again here remember one thing, if there is a net winning of the casual incomes, we have to do the grossing up, and we will see in the solution how the grossing up will be treated for the net winnings of the casual incomes. And next one, that is rent from subletting rupees 45,000, but rent paid by him is rupees 15,000. Again Mr. Raja is living in a rented house, and out of that rented house he has sublet the house for rupees 45,000, and the rent paid to that sublet house is rupees 15,000. Again we have to deduct this 15,000 from 45,000, and the 30,000 rupees will be considered as taxable rent from subletting. Next one, interest on government securities rupees 10,000. Again here they have not mentioned whether it is tax free government security or less tax government security, so we have to assume that it is an interest on government securities which is taxable under the head income from other sources of rupees 10,000. And last one, remuneration for lecture delivered at Indian Institute of Management, Bengaluru, rupees 5,000. Again Mr. Raja has delivered some of the lecture, some of the class at Indian Institute of Management, Bengaluru. So out of that he has received rupees 5,000 in the form of the remuneration. And by providing this much of the information, we have to calculate what might be his taxable income from other sources. Again we have to provide the same information here, that is the computation of taxable income from other sources. The name of the assessee is Mr. Raja, and the residential status is ordinary resident, and we are calculating the income for the assessment year of 2019-20, and for the incomes earned in the previous year of 2018-19. Okay, let us go with. So here comes the solution. The first one, that is, as AMP, that is Member of Parliament, he is receiving 20,000 rupees per month in the form of the salary. So here we are calculating the annual income which is taxable. Okay, so that's why any kind of the values which is provided in the form of month, we have to convert it into 1 year. Okay, salary as AMP rupees 20,000 per month multiplied by 12 months, that comes to rupees 2,40,000. And as I told earlier, the DA is not taxable under the head income from other sources. Okay, second one, that is royalty received from the publisher for writing a book on world peace. So Mr. Raja has wrote a book entitled with world peace, and out of that he is receiving the royalty income of rupees 25,000, which is fully taxable. And point number C, that is income from articles published weekly. So he has wrote once the article which is published weekly, and out of that he is receiving some of the income, that is rupees 5,000, which is taxable. And next one, the dividend from cooperative society. Again I am remembering you guys, that is dividend from Indian company is completely exempt from tax to the extent of 10 lakh rupees of interest, and dividend from a foreign company and from a cooperative society, it is fully taxable without any exemption limit or without any ceiling limit. So here he has received a dividend from a cooperative society of rupees 5,000, which is fully taxable. Next one, the director's fees which is received 5,000 rupees, and winning from lotteries. So here we have to do the grossing of rupees 70,000 multiplied with 70 divided by 100. It comes to rupees 1 lakh, which is taxable. Okay. Sorry, winning from lottery, the grossing up criteria or the grossing up way is 70,000 multiplied by 100 divided by 100 minus 30, that is the TDS is 30 on the casual incomes. 70,000 multiplied by 100 divided by 70, that comes to rupees 1 lakh. Okay. And next one, that is rent from subletting of the house property, that is 45,000. Out of that he has paid the rent of rupees 15,000, which is eligible for deduction, and that is rupees 15,000. 45,000 minus 15,000, that comes to rupees 30,000, which is a taxable rent from the subletting of house. And next one, interest on the government securities. It is a less tax government securities, we can assume, and it is 10,000 rupees, which is taxable. And last one, that is remuneration for the lecture delivered at Indian Institute of Management, Bengaluru, that comes to rupees 5,000. And the total of all these amounts 2,40,000 plus 25,000 plus 5,000 plus 5,000 plus 5,000 plus 1 lakh plus 30,000 plus 10,000 plus 5,000, that comes to rupees 4,25,000 will be the taxable income from other sources for the assessment year 2019-20. So hope that you have understood all these three problems. In the next class we are going to discuss some of the problems from the question paper on the 10 marks and 15 marks section. Thank you very much.